Hey guys, this is Rudy coming at you live from Palm Beach in Florida. It is Monday. It is February the 27th. Monday, February the 27th also means that 2 months of the first quarter is already in the books. So some of your favorite stocks, if they haven't reported yet, will be reporting any day now, including, of course, Occidental Petroleum. We'll have to wait and see what happens with that one there. I'm expecting earnings per share around $2 or so. We'll see how far off I am when they actually report their earnings. Anyway, earlier today, this morning, I interviewed Daniel Major, who is the CEO of GoVX Uranium. And if you are an energy investor and you are interested in uranium and nuclear energy, I suggest you take some time to look at that interview. We only spent about 15 minutes together, but the objective of the interview was for me to give Daniel Major a chance to introduce himself as the CEO of the uranium energy company. Of course, also introduce the company, share with us in his view what the investment thesis is for uranium investors, and then, of course, also add the thesis for why we should invest in GoVX Energy if you wish to do so. Anyway, I thought it was really interesting. He's a really cool guy. Nice conversation we had, and you'll find that one in the library. It's the video that I posted just prior to this one, if you're interested. Now, a couple of you gave me some homework to do, and during the time I was away, of course, I didn't have a chance to follow up on all the energy stocks in the market and see what's going on, because I was focused on mining companies, because I went to the mining Indaba in South Africa. But I did make a video when I came back, and sort of looking at 5 of my energy stocks, you know, the sort of tried and trusted and faithful for me in my energy portfolio. But then a number of the people on our channel said, well, what about this one, Mr. Oxy, or what about this one? So what I thought I would do is just pick a few of them. And Michael, he gave me the most homework to do. He said, VIST, right? That's Vista. Vista Energy. Vista Energy is a Mexican company. So, of course, over the past few months or so, I've been talking a lot about Petrobras and Ecopetrol from Colombia. Petrobras Brazil, Ecopetrol Colombia, and now this one's Vista, which is Mexican. I don't have a position in any of these, but, you know, of course, I am interested in energy. So anytime somebody says or shouts at me with an exclamation mark, Michael, about something related to do with energy, I would like to take a look. So I said I would. And this sort of partially takes a look at some of those stocks. He asked me to compare Energy Transfer to Kinder Morgan. Now, to be fair, they're sort of similar, and so is Plains All America that Scott suggested. But the NGL comes up quite frequently. And then Michael, just for good measure, just to make sure he keeps me busy, also added CTRA and CVI. Now, usually I don't cover these companies. I have spoken about Plains All America and NGL, and of course I talk a lot about Energy Transfer. So I thought I'll take a little bit of time just to compare the sort of other 5, if I could put it that way. But then when we look at them, we can see at a glance, I'm not going to go through all this stuff over here. I'm splitting them up at the bottom of the screen. You can see Vista Energy is on the left, followed by NGL, Kinder Morgan, CVR Energy with its ticker symbol CVI. Don't get confused on that one, because if you use the ticker symbol CVR, you actually come up with a different company. And CTRA, which is Coterra Energy. The only 2 of them that are sort of most alike, and I say this with caution, is both NGL and CVI are sort of oil refining and marketing type companies. The others are a little different, right? So I already said Vista is international because it's Mexican integrated. And then, of course, we know Kinder Morgan, kind of like Energy Transfer, Plains All America is oil and pipeline. And Coterra is U.S. exploration product. So 2 of the 5 are sort of similar, but not the same. I'll get back to that in just a second. And the other 3 are a little different, right? So when you're comparing a few stocks and you're trying to decide which one to invest in, it's always worthwhile to do a little deeper dive and decide then from that point forward which might be the better investment opportunity of the 2 or 3 that you are comparing. But make sure you're comparing apples with apples, because otherwise, yeah, who knows where you end up, right? So if we look at the PE, and of course, it's a good starting point also, the price, always the price earnings ratio for the trailing 12 months. We want to have it under 15. So I put a little red cross here next to Kinder Morgan. So I'm almost automatically disqualifying Kinder Morgan, because 15.2 is higher than the PE of the average S&P 500 company right now. So when the price earnings dips below 15, I might be more interested. So right now, Kinder Morgan for me is just a no. And that's not even because I agree with the analyst. It's just because the price earnings ratio is still a little tad too high. There are too many energy companies that you can buy that are much cheaper based on the price earnings ratio, like Vista, CVI, and of course Coterra. Now, the reason for the zero over here with NGL is because they didn't have positive earnings. But then if you look at the 20-day raw stochastic, we have a bit of a mixed picture here. When we get above 80%, the stock is completely overbought. So right now, based on this technical analysis of the 20-day raw stochastic, Vista should be eliminated, and so should NGL, and so should Coterra Energy. So Coterra is a bit of an odd one here because I've got a check mark in green next to the PE for its 5.1, and then a red cross next to the 20-day raw stochastic because it's just too high. In fact, it's the second highest of the 5. The one that's most overbought, according to the 20-day raw stochastic, is NGL Energy Partners. Maybe you don't want to buy it now. Maybe you want to actually sell it a little bit and take some profit. Now, as I said, Kinder Morgan, I've already kind of eliminated, so skip that one for now. Taking a look at the next slide, I'm just looking here at the performance. I'm ignoring 1 and 3 months and looking at 6 months. My time frame, as you know by now, is sort of 3 to 5 years. So anything shorter than 6 months is kind of a waste of time. In fact, 6 months is also a little bit dodgy for me. But it's okay because it's a half a year, so at least it gives you an indication. If you were invested in Vista over the past year, you invested in NGL, you've done well, you've almost doubled your money, so that's a good place to be. Kinder Morgan, much like many of its peers, and same with CVI, have pulled back a little. Coterra has taken a bit of a hit, much like Occidental Petroleum, down nearly 20% over the last 6 months or so. Volatility is the name of the game here, right? So energy is being assaulted on all fronts by governments and influential people, and still we survive. And if you really think about it, the powers that be have thrown everything they could and can at energy. And still, the price is kind of holding steady for the most part, right? I know it's down, but it's actually doing okay. That's nowhere near where it was just even a year ago, when WTI was trading about $58, $56 a barrel. How about the key statistics here? So we have earnings now coming up as soon as tomorrow is Vista reporting. A couple of them have reported already. And then we have Kinder Morgan only reporting on April 19th, so a little bit away in the future. But look at the anomaly here, right? And I always look for things that are kind of outside of the ordinary. So the reason for these green check marks here is look at the sales by these two companies that are mostly the same of the 5, right? So NGL, almost 8 billion in sales, and CVI, almost 7.2 billion in sales. But look at the market cap. So the market cap for CVI is just over 3 billion. So it's about half of its annual revenue. But look at this disconnect here. We have NGL driving approximately $8 billion in revenue with the market cap currently of only $365 million. Now, sometimes when you pick up these anomalies, you'll know that the picture looks bad for all the right reasons or for all the wrong reasons. So we need to do a little bit of a deeper dive on some of these stocks. Just one more slide before I go into those two that are most alike in a little bit more depth. So this is the graph for the past 1 year period. As I said a few minutes ago, if you were in Vista, you pretty much doubled your money, and you're probably feeling happy if you're in CVI. And actually, if you're in NGL over the past year, you've done all right, 30%. The others are kind of like, nah, sort of in line with the market, right? So no big deal, no great shakes. How about this? So because these two are the most alike, but they're not the same, they're just the most alike. I'm going to get back to that point in just a second when I go into a little bit more detail. So when you look at CVR, obviously you can buy the stock for about $30 and NGL is only $3. So, I mean, you can get a fistful of NGL shares for $3, whereas you could only get sort of a few at $32, depending on how much money you want to invest in either of these two companies. However, There are a couple of things that are interesting here. For the most part, they're kind of the same, right? You can't really compare a $30 stock with a $3 stock unless you use a ratio like the price earnings. And we know because we looked before, it's sort of similar. But CVR looks like a better buy because it's sort of trading in the middle of its 52-week range. So when you can pick it up at $32 and it's got a 52-week high of 43, kind of sort of buying in the middle of the range, whereas NGL is trading right at its 52-week high, which was 311, it's now 303. So you got to know if you buy into NGL now, it might pull back and quite significantly over the next day or two. Who knows, right? You never know with these things. However, just today, as I said that, NGL was up 9%. This was just about an hour ago or so today. So a huge gain for NGL stockholders today, but it's very volatile. So we don't know what's going to happen tomorrow. CVR, on the other hand, up nicely as well on a day when there's not a lot going on, and most of the energy stocks are actually sort of either flat or even negative. So this is a good performance by these two stocks. And because they are sort of the same, I'm comparing the two, right, side by side. Oil, gas, and consumable fuel small cap blends is similar. The picture for older guys, maybe more risk-averse guys on CVR looks a lot better than the more speculative buy for NGL, maybe for the younger guys, right? So if you're young and you are earning a good income and you want to take a little bit of a whirl with something like NGL, you can buy some and you can take higher risk. If you're older and you need to sort of focus on capital preservation and wealth preservation, you don't want to like take a ridiculously crazy chance, then CVR might be the better choice of the two for you. But these are good numbers, man. When you look at CVR over here and you see they strong, good positive earnings per share over the last trading 12 months, a very, very good PE ratio to open a position in at only 7. As I said, the S&P 500 is currently sort of just under 15. And you got an annual dividend yield of $2 on this stock, which is yielding currently about 6%. That for the older, more risk-averse guys, this is a much more secure investment. You can actually see that at the bottom of the screen as well, held by institutions, almost 96%, and the rest of the float is short, around 3%. NGL, much higher risk, right? So you're young, you have a high income, you have a lot of time ahead of you, you can take a chance on one of these, but you got to be cautious, and I'm going to share some of the reasons why you got to be cautious with you just on the next slide or so, and then you can decide whether this is something you want to buy, hold, or sell. Not good numbers. I mean, there's nothing really to speak of. It's also a smallish company with a market cap of under 400 million. And you can also see that reflected in the institutions. 23% of the outstanding float is held by institutions. And I can almost guarantee you that most of the institutions that hold NGL just hold little, little slithers of it in their portfolio just to have some to see what happens, take a little bit of a chance. Now, here's the thing, right? So I'm saying these two are most alike. And of course, they are almost, in theory, the same, depending on how you view the industry. But this is CVI's position in the oil, gas, and consumable fuels industry versus its peers. Now, firstly, on the graph, you can see it kind of sits there in the middle, which once again, for the older, more risk-averse guys, the middle is kind of, sort of a safe place to be. But look at the description here at the bottom. CVR Energy is a diversified holding company which is primarily engaged in petroleum refining and nitrogen fertilizer manufacturing industries through its holdings, right? So keep that in mind. Primarily engaged in petroleum refining and nitrogen fertilizer manufacturing industries, right? Now let's look at NGL, which outperformed its peers significantly, right? So for the younger guys who are invested in NGL, it's like a score, right? We made a lot of money. But look at the description of the company. NGL Energy Partners is a diversified midstream energy partnership that transports, treats, recycles, and disposes of produced water generated as part of the energy production process. So they're not the same at all. How do I know this further? By looking at their peers, right? It tells me on the slide that I'm showing you that the peers for CVI are HF Sinclair, PBF, DELAC, and PAR Pacific, which are 4 of its peers, which doesn't even mention NGL. And NGL, on the other hand's peers are Genesis Energy, Cross America Partners, and Summit Midstream Partners, right? So even though they are the same, they are not the same And in fact, you cannot really compare one with the other because they are completely different industries. So what you need to do is pick the one that you think you might like and then do a deep dive on that one. And a deep dive means you also have to look at the balance sheet, the profit and loss, and the cash flow projections, and the past reports for the company in order to decide whether this is investable for you or not. Just to close it off here, profitability analysis. I'm looking at CVI here first. This is not a good picture. So we're looking at gross profit, operating profit, and net profit over the trailing 12 months. So for the past year, the industry mean is 33 and CVI comes in at 10 on gross profit, underperforming significantly, less than 50% of the industry's operating profit margin, even though it ended up beating on the net profit margin over the last trailing 12 months. So CVI has actually done okay on a net profit margin basis, but not so good in terms of generating gross profit and operating profit. You cannot continue like that. It needs to be improved. NGL, on the other hand, just fails dismally on all scores, even on net profit, right? So at least CVI was showing you an increase on net profit compared to the industry mean, but NGL doesn't even come close. Just you failed the test. How about this financial strength? You know, I always look at the debt, right? So this is not a bad picture for CVI. CVI, even though its debt to capital ratio is super high, 2 times that of the industry, and its quick ratio sucks because it's got a quick ratio below 1, which means from a quick ratio point of view, we're talking about current assets to current liabilities, and it doesn't have enough cash in the bank to service its debt. However, it has interest coverage at the bottom for the most recent quarter of 13 compared to the industry's 10. And because the operating profits are 13 times greater than the interest payments, there should be no or little difficulty in repaying debt. There should be no difficulty in repaying its debt. NGL, on the other hand, is not looking good at all. It's got a debt to capital ratio of 70%, more than 2 times the industry's average. In addition to that, it doesn't have enough cash on hand, cash and cash equivalents on hand to settle its immediate short-term debt. And in addition to that, it's going to face trouble servicing debt because it's got an interest coverage ratio of only just over 1. So at least CVI was 13 times coverage on the coverage ratio compared to NGL's 1.46. So NGL is one of those high-risk situations. Man, you guys can tell me in the comments whether you would buy, sell, or hold any of these. I kind of gave you an abbreviated view of just what I'm sharing here with you, which is if you're an older guy and you're kind of risk averse and maybe you're retired or you don't have a regular income anymore, you know, there's some stocks like NGL you probably should stay away from. On the other hand, you know, some of the others look okay. Vista certainly looks great. Obviously, I didn't cover it in this video in much depth, but if you held Vista long and you doubled your money over the past year, congratulations. I am happy for you, and I'm glad you're making money. Anyway, let me know in the comments what you guys think. I don't have a position in any of these. I probably wouldn't open a position in any of these either, because as you know, I have a whole basket of energy stocks already, which includes some super majors and you know, some smaller companies and some uranium stocks, or you know, so my energy portfolio is kind of full, and that's one of the reasons why I'm looking at mining. And even when I look at mining, my bias is automatically to go towards energy. So that's why I'm looking at GoVX Energy, which is the interview I started this video with. If you want to see my interview with Daniel Major from GoVX Uranium, it's in the library, the video just before this one. So on that one, have a great day, guys, and have a good week. It's Monday today. I hope you have an awesome week, and hope you stay healthy and everything is fantastic. Take care. Bye-bye.